If we go with a scenario where there is an attempt to take out the alleged Iranian nuclear facilities or activities, what happens to the oil price then?
Do the Middle Eastern powers jump in? Does it become a Middle East-wide conflict? Does it become a global war? Triple digit? For sure.
Welcome to You're in Business. Today we're joined by Vandana Hari, the founder and CEO of Vanda Insights. She is one of the leading oil market commentators with nearly 3 decades of experience providing intelligence on the energy commodities markets. Vandana, fantastic to have you on the program.
Yusuf, it's absolutely my pleasure. Congratulations on your show and just delighted that you invited me.
Let's roll back to the beginning of the year. If I would have told you on January 1st that come May, oil prices, Brent to WTI would be around $60 a barrel, would you have called me crazy?
Likely I would have, Yusuf. So again, knowing you, I would have probably asked you, what is it that you know and I don't? But yes, I don't think anybody had anticipated this low prices. I think the scene that was being set for 2025, pretty much from the fourth quarter of last year, was that it was going to be an economic slowdown, an oil demand slowdown. OPEC at some point would start bringing back the barrels that they have withheld. So prices would be lower on average than what they had been in 2024. But 60s, and even we have seen a few dashes below 60 for Brent. I think that would have been very far away from everyone's mind.
And so what do you take away from that price? Is it the sign of a slowing economy, or is it an indicator of too much oil that is slushing around the global landscape? Or more likely, is it sort of a combination of both, I guess?
To my mind, Yusuf, it's more a demand problem. I think, of course, we knew Trump was going to roll out tariffs, but I think what the markets had not anticipated that they would be this severe and they would cause this extent of turmoil. And especially when we look at the Liberation Day tariffs, I think safe to say, probably other than Trump's inner circle, pretty much the entire world was very surprised at how aggressively he came out with his tariffs. And as a part two to that, I think it was also how quickly and to what extent the tit for tat between China and the US ramped up. And, like we were talking of 145%, 125%. I mean, almost, eye-watering, I suppose is the right phrase for it. That took the world by surprise. So what we've seen over the past several weeks, especially because of tariffs, is a rapid downgrading of economic expectations. Mm-hmm. And that translates to a downgrading of oil demand expectations as well.
Okay, let's roll that out in a bit more detail, because I was looking at the numbers from retail sales in China. Missed expectations, not by a little, like by a lot, by a landslide. And it's another sign that the stimulus that they are trying to inject into the local economy is just not taking hold. What is your analysis on demand from China, which is, one of the critical legs of the global oil equation?
So I think very clearly Chinese oil demand was set to slow down, or rather continue slowing down this year. That trend had been observed, verified. I don't think there was any doubt pretty much since the post-COVID reopening of China. So if you look at 22, 23, China has been on that trajectory. It's economic slowdown, but also structural shifts that are ongoing and which even predate COVID. So we know, for instance, that the property sector and to a large extent industrial production in China, even before this tariffs problem, which are the main drivers of diesel demand growth in the country, both of those have been slowing down. These are very, very structural issues that are not going to go away anytime soon. A lot of the stimulus that has come out late last year and right up to the recent days is actually just simply not enough to move the needle in a big way in terms of Chinese economic momentum. So what the tariffs have done is actually just worsened the picture in terms of what outlook we have for China's economic momentum and oil demand. But it's not materially changed anything. I think if you look at especially the structural changes happening in China, it is already very close to peak oil demand, if not already beyond it.
So they consumed around 15 million barrels per day in 2024. I believe that's CNPC official data. How does that set us up for 2025? Do you think that they're going to be around the same figure come year end?
I would say, Yusuf, the best case scenario for me would be probably 200,000, 300,000. Almost sounds optimistic even as it comes out of my mouth. That would be the optimistic scenario, which for me would equate to China and the US de-escalating. And by de-escalating, I don't mean just for 90 days, what they have just done, but actually going back to square one, as it were, maybe 10% tariffs against each other. Even then, I would say we need to be very careful in assessing how quickly the trade snaps back into place. I mean, these are not like Lego bricks, that you just, when companies move out and make investment decisions or stop making investment decisions, move their businesses out of China or, manufacturing somewhere else, it's not something that's going to snap back easily into place. So overall, I'm quite bearish on Chinese oil demand.
I mean, 10% tariffs seem like a very, very long way from where we are today. At the same time, I look at the oil price as we speak, and despite the dollar index becoming weaker since the beginning of the year, so down 5 or 6%, oil's come down as well. Now, that's historically, there's this traditional inverse correlation, right? So dollar down, oil up. Dollar up, oil down. That's kind of been the dynamic of the last, 30, 35 years. That dynamic is no longer in place. So you have a weaker oil price despite a weaker oil dollar. Despite a weaker dollar. Are you alarmed by that?
Yeah, not necessarily alarmed is not the word I would use. Yeah, it's inconvenient. Definitely, if as an analyst, you are going with certain presuppositions, you're looking at history as a sort of yardstick on what to expect, and then you try and come up with some sort of projection for US dollar, and then you want to use what is the historical norm, and then you realize it's broken. With regard to US dollar and crude prices, the traditional or historical inverse correlation, I think it's probably best to set it aside. I would suggest also to look at it in a very short phases, short cycles. It does. It's not always broken. It does sort of sometimes snap back into quite a strong inverse correlation. But equally, in the past, especially 2-3 years, COVID, the geopolitical tensions, then the Fed first raising rates and dropping rates, I have seen very strong positive correlation as well. And finally, I think an important factor to keep in mind is the US becoming a net oil exporter. I think that has changed. That has introduced quite a lot of complexity in the traditional relationship. So now when you have higher oil prices, the US actually, it is a major consumer, but also the biggest exporter. So it benefits from that. And as a result, it strengthens the dollar. So be totally prepared to see coexisting high oil prices and high and stronger US dollar, and inverse for the lows as well.
US President Donald Trump just completed his tour of the Gulf, and he visited Saudi Arabia and Qatar and the United Arab Emirates. And on the sidelines of that tour, he repeatedly said the Iran issue is going to get resolved one way or another, right? If we go with a scenario where there is an attempt to take out the alleged Iranian nuclear facilities or activities, what happens to the oil price then?
Yeah, interesting question, Yusuf. So, yes, Trump has been conducting a sort of a gunpoint diplomacy, if you will. He has threatened time and again that if Iran fails to seal a deal, or if US and Iran do not clinch an agreement, then there could be military consequences. again, just, trying to sort of unpack this in the light of his negotiating style.
You don't seem convinced.
I was just getting to that. Yes. Okay. I like to see this as a negotiation tactic. It's not that I'm not saying that he's not capable or the US is not capable. And certainly it has the military might to do that. And we've seen what they've done with the Houthis, for instance, right? My base case, Yusuf, is that it will not happen. Now, I don't know, you want to call me an optimist or is it simply, I'm that's with my analytical hat on and putting that aside, the worst case scenario as a negotiating tactic. So it's not my base case scenario that it'll come to that. And let's wait and see how this unfolds. They have had 4 rounds of talks already. I think a 5th is scheduled over the coming weekend. And, both sides have a lot at stake. They need to save face in their constituencies, in whatever they agree. And there have been a lot of knotty issues, we know, in this whole process. Back when the Biden administration tried to forge some sort of an agreement as well. But if it does happen, I hope not. I don't think, Yusuf, that this will simply be a case of just the U.S. Attacking or taking out nuclear sites in Iran. I am afraid this could go back to what we saw last year, for instance, when Israel and Iran at least twice directly attacked each other. There was huge geopolitical risk premium in crude, and I think I'm fear that's what will happen. Huge volatility, a lot of geopolitical risk premium on account of fears of what this means. Is there going to be a Middle East conflagration?
So you've not gamed this out in terms of the scenario because you're not saying, I understand it's not your base case, but is this the moment where oil would go triple digit? Or would you say even then, given what we're talking about in terms of demand and supply, the reaction function could be quite limited, right?
Again, Yusuf, it's in such situations, it's really hard for the market to work its way all the way to, so like step by step, what might happen next, and do the Middle Eastern powers jump in? Does it become a Middle East-wide conflict? Does it become a global war? It's really hard. So I wouldn't rule out, triple digit for sure, right? And there would be no limit for oil prices, but you won't find, again, saying me that I think there's a case that'll happen. I think a very, very, very small tail risk.
I was looking at a report from JP Morgan. They're forecasting oil prices to be maybe $100 a barrel in the third quarter if OPEC Plus extends cuts. This is a report from late April. Do you stand with them in terms of that bullish view for oil prices, or do you think that it's a little bit over-optimistic?
It is not on the mark, Yusuf, based on my assessment of the situation with OPEC Plus, the internal dynamics. I have spent a lot of time over the past 3 decades looking at it, studying very closely. The situation that they are in now with just 8 members cutting the 2.2 million barrels per day. They were at one point looking to start unwinding that last year. It's been pushed back several times. I don't see them going back to a situation of actually cutting deeper. So, so keep in mind that we're talking about 2 steps here. First of all, they stop the unwinding of the cuts, and then they say, now can we cut deeper? I really don't see, and I know this is a fair question for the oil markets to ask. A lot of people, for instance, ask, what prices would crude need to drop to in order for OPEC Plus to go to that route?
Exactly.
Again, you can't rule it out, but I don't see that again as a base case. I think they will continue with the unwinding, and my assessment is that they will actually continue with the acceleration of the unwinding as well.
What about the relative unwinding of the diversions that have been in place around the Red Sea area? The US president said that the Houthis have been dealt with, so in theory that should bring back a relative freedom of navigation and movement. The Houthi attacks had resulted in a rerouting, just as a reminder, of tanker flows, oil tanker flows, 10% of them from around the world. At what point do the tankers fully put their faith back into the Red Sea? Or do you think that this is going to be something, that's going to happen over a longer term?
So I think just to be clear, the Houthis said that they would not attack American ships. And at the same time, they made it very clear that their conflict against Israel continues. So the way I look at it, I really don't see why shipping companies would risk going back through Bab el-Mandeb and the Red Sea until and unless the Gaza situation is resolved. I think, that's what I would think we need to see in order for the confidence to return for the ships that have been diverting through across the via the Cape of Good Hope to return to this route. Yes, it's a longer route. They use more bunker fuel, but it's just another adaptation mechanism the market has adopted, and it's just become par for the course for the past several years for the oil markets.
What have you put in for your forecast for 2025 and 2026? Because I am keeping track, so I could put you down with your numbers. And then come end the year, come 2026, we see if we were on point and how close you were to the mark. So where are you with those numbers?
Yeah, so if you look at Brent average, it was $79 a barrel last year through 2024. As we were getting into 2025, my expectation was it'll fall somewhere between $70 to $75 a barrel. So as I mentioned earlier, I wasn't that bearish because we hadn't seen the full impact of Trump's tariffs. We recently revised it lower, but not as low as some of the other forecasts I've seen out there. I'm thinking more in the high 60s for the full year average for Brent.
Let's talk about another major oil consumer, and that is India. They're the fastest growing major oil consumer. And sometimes I wonder whether they're using that leverage enough when they speak to oil producers. Do you think that they've done a good job with their oil policy in the last couple of years?
In a lot of respects, they have. They have been working more closely. And now, again, a lot of these things happen behind the scenes. They do happen very much in public view at international conferences as well. India launched India Energy Week, quite a high-profile conference 2 years ago. That's provided a good forum for these kind of conversations. But a lot of it goes on behind the scenes. They are working closely with OPEC as well as the International Energy Agency. So that's good. I've seen India put forth a very powerful, well thought through stand in terms of energy transition, at the COP meetings, in other avenues. So I think India has done very, very well in that regard as well. The one area that I do think India could do better is having a better, bigger strategic oil reserve. So India was a late starter on that, and it has been a bit slow going, and especially if you compare it with the kind of strategic reserve capacity and barrels that China has amassed. But
why has it been going so slow? Where is the delay coming from? Is it the bureaucracy and sort of the deeper layers of government? Is it from, counterparties abroad? Where is the holdup?
It's hard to say. It could be, I think the political will is there. Probably the urgency has not been felt. So as I said, they have started. They have started creating the reserves and stockpiling. It's also a question of, you should have to be ready with the capacity to be able to buy when the prices are low. Something, again, that China has done well. So that's one. I think on the upstream side as well, India could do a bit more. It's got quite aging reserves. It has sort of oil and gas fields that are more offshore, that have not been tapped. It's been trying to attract foreign investment, but and trying to upgrade its, make its upstream contracts more attractive as well. But a little bit slow going there as well. It could do a bit more on that end as well.
The other topic that I'm thinking about is India has been buying Russian crude in large amounts. And you begin to wonder if this effort to, create a deal between Ukraine and Russia, which the US administration is trying to achieve, what would happen? Is that sustainable, that model for India? If sanctions evolve to a higher level, then suddenly those oil imports are seriously at risk, aren't they?
Yes, I guess you could say that. The factor to keep in mind with regard to India's imports and have gone up to as much as 40% of total imports in terms of Russian barrels is that India is buying the vast majority of it on a spot basis. So had it entered into term contracts, I think that would have been a bit tricky, especially if those Russian crude returned to market pricing, and then you have to take it on a term contract basis, and then you've sort of locked up. Pretty much, you've left very little maneuvering room for yourself, with 40% of your crude locked up with just one supplier. But Yusuf, I do believe, there's plenty of evidence over the past few years, especially with the rerouting of all the Russian barrels, in the resilience of the markets. I think that's one good quality of the global oil markets and its individual components, buyers as well as sellers, have been able to maneuver around the biggest shocks pretty well. We had the COVID shock, the demand shock, and then the supply shock with the Ukraine and Russian sanctions. So, no, I'm not overly worried. It will hurt the margins of the Indian refiners for sure. You read a lot of reports about, the Russian discounts have widened, they have shrunk. That's not good news. But all said and done, India's still getting it at a discounted rate. And if that disappears, then obviously it's not good news for the refiners. But as of now, I think there's quite a few steps we have to cross before we get to that point. We don't even have a Ukraine peace deal on the horizon as we talk today. And after that, does the US actually remove all the sanctions in one go? Does Europe begin to import Russian crude? Most likely not. In which case, China and India will remain the markets.
I've spoken to a few other experts on energy in India and specifically fuel prices. And there's this frustration that despite the drop in crude oil prices, it hasn't really fed through to what people are paying at gas stations across various parts of the nation in India. Why is that?
I'm not an expert on that. I can give you a very high level overview, Yusuf, that big chunk, and I don't have that percentage at the top of my head right now, but a big chunk of the pump price is taxes. A lot of it are fixed price taxes, so which do not go up or down with oil prices or with the price of crude. So that does end up being like a buffer and sort of not allowing the entire pass through of crude costs to the pump.
In terms of the governance of OPEC Plus and its evolution into the organization that it is today, we've both had a front row seat to how it's grown from just OPEC to OPEC Plus to, its much more regular meetings, to its attempt to, get more realistic and accurate data. I'm wondering, what do you think the next iteration of that evolution is going to be? What happens next with OPEC Plus, given that there are cracks within its ranks?
Yeah, again, that's a very, very interesting topic.
A bit philosophical, maybe a bit heavy, but it's important. So
absolutely. In fact, Yusuf, because it is philosophical, I think it is all the more important. And let's take a philosophical approach to that question as well. If you look at OPEC Plus today, 22 members, I actually counted as 21, doesn't really matter because I discount Mexico, together producing about 40 million barrels, but give or take, right? Of those, when you say 8 members, sometimes for people who are not in the sort of weeds with the numbers, the point will be missed that it's not actually 8 out of 22. Every 3 out of 4 barrels that OPEC Plus accounts for comes from these 8 members. So about 30 million barrels per day is just these 8 members alone. Now, let me put out a slightly maybe contrarian, controversial view, whatever you want to call it. OPEC Plus, in a lot of ways, has to now sit back and go back to the drawing board, right? Like, what is its raison d'etre in a way? And then look at its composition as part of that as well. So if we look at these 8 members, practically, I think maybe that is the future OPEC or OPEC Plus for you, is what I would argue, because these are the only members which are capable of increasing production, importantly, and capable and willing to drop production, equally importantly, right, to reduce. All the other members, a lot of them very small members, are actually still struggling to just bring back to the levels that they were pumping at before COVID. So maybe that's the way for OPEC Plus to go. As an organization that tries to balance the market, is a balancing force, it remains nimble, flexible, a lot of the attributes which we've seen come through in the coming years. I think as an organization playing that role, I think it remains a very vital, and I hope it sticks together and continues to play that important role.
So you're calling then for sort of a core Security Council of the United Nations. So maybe that's the way to look at it, right? Sort of a core members where their votes matter more than the rest of the members. So the other members would still have a view, a voice, but that the others can proceed in certain moments where required, right?
Yeah, in a way. I mean, if you look at the outside the core, Iran, Libya, and Venezuela, the 3 members that are outside the quota system are outside that core 8-member group, right? Let's say Iran and the US agree a deal. Iran manages to, over a period of time, get back to its full capacity, has full access to markets, and maybe at some point then it can come back into the core, because it will be defined by that same terms. It has the flexibility to produce more, but is equally willing to cut back. I'm not sure if Venezuela or Libya will get to that point anytime soon. But yes, essentially, I think that's what I see could be one potential way forward for OPEC Plus.
That wouldn't be in the interest of the United States, though, would it? I mean, maybe the way to do it is to bring the U.S. on board in a core grouping, because they're now one of the largest oil producers. I mean, 13.3 million barrels per day as of late 2024. That's a lot. That's a lot of energy.
Yeah, a provocative question, though, and I'm sure a lot of people, our listeners in the US especially, and who know how things, Washington, D.C. works and the US shale sector works, will be kind of nodding their heads 180 degrees no, right? It's not going to happen.
Yes, agreed.
If OPEC Plus has to be ready to cut back production in coordination, if that's what the markets demand, there's no way the US is going to be a part of it. We know that, right?
Yes. I mean, especially with the current administration, agreed, right? So there's more gravitation towards going alone and, rather than teaming up with others. And there's been this ongoing competition for global markets for many, many years at the cost of, billions and billions of dollars in capex and lost exports. So, the question is, how can you bring them together? And I know this is out there in terms of potential scenarios, fully aware that it's not a realistic scenario, but we are trying to think outside the box on this program, right?
Sure.
Because we have the time to do that. So maybe touching these more sensitive topics and looking at it with a fresh set of eyes. But you're saying it's still a no from you. Okay, not going to happen.
Yeah.
I was looking at the Financial Times, and they had an article headlined, "Are big oil companies prepared for a prolonged market downturn? A decade of cuts has left many of these companies with limited flexibility for further reductions without endangering oil and gas production." Do you agree or disagree? Maybe this is the real thing that we needed to focus on.
Yeah, so whether you're talking of a company within an OPEC Plus member country or outside, cutting back production, we know that is always difficult, because it's just the way the dynamics of the reservoir, right? And, we're talking of conventional oil production in the vast majority of the world outside the US. So the shale sector is different. You can switch it on and off in fairly quick order. But it is difficult for companies to cut back production. Now, again, but I think it's different in how OPEC Plus works. And we've seen recently, for instance, I think it's been quite an interesting case with Kazakhstan working with foreign companies, being an OPEC Plus member, unable to demand that they cut back production, especially after they poured in so much of investment to increase capacity. So I think, whether are you talking about how companies do it within the OPEC Plus member countries or companies do it outside?
No, not necessarily. So this was a sort of a broad question. So whether within OPEC Plus or without, I think the point is still the same, is that these oil companies have pulled back and trimmed back over a long period of time to be more efficient. And so now if there is a downturn, can you really deal with that? And a lot of the big oil companies have mapped out their projections in terms of revenue and profits on the basis of, say, 65 or 70 or $75 a barrel. And now if it comes in 55 or 60, you've got a problem you need to fix.
Yeah, and not a problem that's easily fixable, right? A lot of the, how the economy is going to pan out, how the tariffs will evolve is really very hard to project at this point. The only tool really that they have in their hands is to cut costs. And we see companies doing that. And, sort of share buybacks will probably go down a bit, dividends go down a bit. But there's sort of limited tools they have to hunker down for a prolonged period of low oil prices. Over the longer period, Yusuf, really for any oil company anywhere in the world, it's the constant endeavor has to be to bring down production costs. Now, in some places, it's relatively easier. We know, for instance, the shale majors are doing it. That's where a lot of their investment is going. But in a lot of conventional deep offshore plays, older fields, and especially where you have to do enhanced oil recovery and you're actually pouring more money into it, it's really hard to do that. So it's just, it'll have to be a period where they just have to tighten their belts and sit this out.
Is there a big oil company that has sort of drawn your inspiration in the last couple of years in terms of how they're handling their capital expenditures, their buyback, their dividend, and you would say they found the right balance, which, obviously they're often competing forces?
Yeah, so when I look at ExxonMobil and Chevron, I think I like the fact that they didn't get swayed too much by this energy transition winds, go to an extreme, as we saw with some of the European companies, which have then subsequently had to do a lot of course correction with a lot of heartache, I'm sure, within the companies on the part of shareholders, a lot of conflict, tension. So I think ExxonMobil and Chevron, by sort of staying steady on that track that, oil and gas is here to stay, we need to stick with it. I think they did the right thing. When I look at Europe, I think Total stands out. They've hitched their wagon to natural gas. I think that's a great bet going forward for the next several decades. I think Shell has in terms of course correction, I think Shell has done reasonably well. Unfortunately, as we've seen, BP has been a bit of a laggard.
Well, thank you for laying it out like that. A quick reminder to our global audience, everybody watching, to tell us if you have any questions or you want to share any comments, any strong views you have, just do that right below. We always want to hear from you. Vandana, I am looking at oil data, which is sort of a bit of a passion project for you. And I want to ask you about transparency. Why is it still so hard to trust inventory and demand data?
Very simple answer to my mind, Yusuf. It's just very hard to count the barrels. Now, yes, we have had improved techniques. Just if you look at some really good names out there that have cropped up in the last decade or so that track ship movements and to do a very good job actually of ascertaining which ship is loaded with how much, and whether it, and even things like in the more opaque markets, in the shadow fleets, and whether there was ship-to-ship transfers and so on. But at the end of the day, when you're looking at 100 million barrels every single day, not to mention the billions of barrels in storage that move in and out, it's just it's a very, very complex task. When you look at countries like China, they regard a lot of these numbers as state secret. So where you have countries freely reporting some of the data you can trust and you can take at face value. But what do you do with countries where you can't even get data, or you get data with a lag of 2 and 3 months? I mean, these are fast moving markets. We're tracking oil prices like what is it doing this very minute, and what was it doing the minute before, right?
Exactly.
And then you're like juggling data from the past week. For instance, Energy Information Administration in the US tells you what happened last week. And then you have data 3 months ago. How do you put it all together? I just think it's complex. And I empathize, Yusuf, with agencies and companies that try to put it all together. It's a thankless task, and it's a very difficult task.
You think it's going to get better with sort of satellite technology and artificial intelligence, that it can sort of lift the fog of the oil war, not to be overly dramatic?
You said my favorite 2 words these days, artificial intelligence. So again, artificial intelligence, from what we know of it and in the form it exists in now, is only as good as the data it is available to it.
Okay, yes.
Artificial intelligence can't go and get any more data that we don't already have. But yes, when we do have good data, but on the more positive part, when we're dealing with so many tons of numbers and millions of barrels, putting it all together quickly in a very concise, quick to see format, I think AI could be helpful there. But the collection of data from the ground itself has to be rigorous and credible.
What about global oil demand, which is sort of the other debate I'd like you to weigh in on? Are we in a situation where we've passed peak oil demand, and are we just flattening? Are you with the IEA, which expects demand to peak before 2030? OPEC disagrees.
All said and done, 2030 peak demand to me sounds almost like wishful thinking, Yusuf. I don't see a high demand growth continuing for sure. I think we're definitely entering an era for a long, long period, perhaps forever, of moderate year-on-year growth, but I expect it to continue growing beyond 2030.
A strong view there. I love it. I want to turn to a bit of a personal segment. Start off, the biggest oil market call that you got right. What was it?
Oh, I would say, this is going to sound really haughty, but I think often I put out contrarian views. I'm very, very proud of that. It quite often is risky. It's, sticking your neck out, but very, very regularly. And my clients know that. I do get the calls right. What is important, Yusuf, is, and I'm talking about short term, like next 3 to 6 months, what is likely to happen to prices. Especially, I would say, I feel good about being painstakingly staying out of the echo chamber, especially when, geopolitical forces make it, prompt a lot of people to say, that's it, now crude is going to, triple digits, 100, 150. And I say, well, no, not so fast. As sort of attractive as it sounds to, start putting out those numbers, let's take a breath here. How likely is it going to happen? So I would say pretty regularly, I'm quite proud of the track record we have established. Our very young company, Van Dyne just for the past 8 or 9 years, but I think we have kept our clients on the right track far more often than not.
Tell us about a moment in your career that defined you for the rest of your life.
Rest of my life, probably I wouldn't characterize it like that. But Yusuf, a lot of pivotal moments, a lot of eureka moments stand out when I look back, and there's a long period to look back, a 30-year career in the oil markets alone. one of those was, I would say, about 8 or 9 years ago, when Vanda Insights was still a sort of a sparkle in my eye. I had started like putting together the idea of it, or it had, organically started to sort of coalesce together. I had this gentleman who owns a perfume making company in South Asia reach out to me on LinkedIn. I didn't know him as outside of LinkedIn. We'd just become LinkedIn contacts. And he said, I'll be coming to Singapore. Let's catch up for coffee. And I said, okay, perfume. And, I'm not quite sure how he would be interested at that point, why he would be interested in my macro picture on oil. But we had a very interesting coffee chat. And then he said, are you starting a subscription? Are you going to sell your reports? And I was like a little taken aback, because that was the first time that thought had even crossed my mind. And he said, okay, when you do, send me your pricing details. And, it struck me a few things. Yes. So first of all, that there's this huge, I would say, underserved community. A lot of companies that are exposed. They may not be direct buyers of major oil products, but in the case of perfumes, of course, they're exposed to solvent pricing and so on, which in turn is exposed to crude pricing. So, but they don't want all the details that a lot of very big brand names companies offer on, everyday pricing and trading of different products, but they want the big picture, told in a very simple, succinct, easy to understand, at the same time credible and consistent manner. So that company did become my very first client, the very first check that Vanda Insights got. And, it's something I'll always remember, that it's sometimes these eureka moments that, it's serendipitous almost.
That's very, very powerful. And you must be so proud looking at that pivotal moment and how everything changed after that with that vote of confidence. Do you drive an electric car or gas guzzler?
I don't drive a car, Yusuf. So I gave up my last car, I would say about 8 or so years ago. The beauty of Singapore, one of the beautiful things of living in Singapore, is a fantastic public transportation system. Okay. And I said, if I can use it, I will use it. So I don't drive a car.
You've been covering oil barrels most of your life. Do you own any physical barrels in any storage somewhere?
Over the years, a lot of the companies that we visited, so as you know, I worked for Platts, now called S&P Global Commodity Insights. When we visited companies, I have a collection of little plastic barrels with oil, condensate from Australia, darker oil from the Middle East. I would say perhaps all of them may add up to a few ounces.
Okay.
That's my position.
All right. And then how do you relax and unwind?
Yeah, I think that's very, very important. I take it very seriously. As that sounds a little contradictory, but I think looking after one's physical, mental well-being is, especially the kind of world we are in today, a lot of stresses, strains, very natural as part of your, and especially if you're an entrepreneur, a late life entrepreneur like me, I take exercise very seriously. I like racket games. I play squash very, very regularly. Sometimes a bit of yoga and meditation.
I've got a yoga class scheduled for today, actually. I do it once or twice a week. Yeah.
That's great. I love the nature. I love spending time in nature. I love photography. I love photographing nature. So all of those things help me unwind.
I've also been experimenting with looking at the phone a little bit later in the morning and not right when you get out of bed. But that's just so hard to do in a world where you've got to go through the news, and sort of from moment to moment things can shift. Closing question on what the best hack is for global travelers. You said you're, on the move a lot. So what do you think has been, the most helpful principle as you approach a lot of your global movements?
In fact, and that's a fantastic question to wrap this up with. I have been traveling a lot. This is going to sound silly. One of my hacks, which is really worked fantastically for me. There was a trip a few months ago, so I'll just dial back briefly. I packed my laptop. Obviously, I have an external monitor that I carry with me as well.
Fancy. All right.
I forgot to pack the charging cable for my laptop, and I use a MacBook, and it's like $100+ and it's just money I didn't feel like spending. Somehow in that trip I managed to pull through. But so now I have this case, and these are leads that I don't unpack and use at home, where I have all the leads, USB-Cs, A, Bs, Ds. I don't think there's a USB-D, but when it comes, right? All my leads in one place. It's nicely, zipped up bag. I just pick it up from my drawer. I dump it in my bag, and then I don't have to worry about finding myself at an airport trying to work. I put out reports in trains, buses, and airports, but I'm never without the right cable.
Vandana, this has been an incredible journey. Thank you for sharing a lot of your insights and some of your harder and also very rewarding moments in a 30-year career. That's Vandana Hari there. Thanks again.
It's been my pleasure. Thank you so much, Yusuf.
Thank you for listening to You're in Business. If you've enjoyed the conversation, like, share, and subscribe. See you next time.